Hello everyone, thanks for being here. Today is Tuesday, June 11th, and welcome to our new Elliott Wave webinar. As you know, I was away last Monday. I had some personal stuff, so I took a break, and now we are here ready to update you on some of the markets. As you know, we have seen a pretty interesting moves to the upside of the last 2 weeks on stocks. We were seeing move to the upside to new highs on the S&P 500. Dollar has seen some of reversals since end of last week, and all of this is happening ahead of very important US CPI data tomorrow, and also the Fed decision, as you know. So before we go to some of FX pairs and the wave counts, I want to bring attention to crude oil. Now, if you are following us on Twitter, then maybe you have noticed that I shared this chart of crude oil versus US CPI already. I think it was last week. So energy as a whole is the most important. For inflation expectations. Okay, and so far, if you look here, you can see that correlation with the US CPI is very tight, right? So crude oil has been actually declining through April and May. So if now we will get the data for the last month, the inflation data. So maybe these lower crude oil prices that were visible through April and May will also be visible on inflation figures. Maybe the inflation figures will soften. So if that would be the case, then it means that again, maybe Fed will be one step closer to potential cut rates. You will see US dollar coming back to the downside with the US yields. Of course, that's all just pure speculation, but what I have been tracking for the last few months, this model has worked pretty well. Okay, so I definitely would not ignore the fact that crude oil has dropped from $88 per barrel down to 72 or so in 2 months or so. Okay, and this definitely should have at least some impact on inflation. Everyone was looking at copper prices, and the inflation will, because of that, will come out very hot. Well, but a lot of them just ignore what is happening on crude oil, which has been quite stable and even bearish for the last 2 months or so. Now, when it comes to crude oil, just basic technical analysis, I still think that we will see break to the downside this year, maybe after summer. As you know, summer trading conditions during summer can be possibly very slow. So maybe we'll not see any break to the downside just yet, but maybe this could happen after summer. You know, there are also the US elections, so I don't think that Fed will be hawkish. They will probably be dovish, and we will see how this will be impacting the US dollar and the US yields, and obviously crude oil could also stay bearish on that note. So I'm looking for potential bearish head and shoulders formation here. Of course, we are not breaking down yet, but I think that this could really be happening once we see this current rally completed. So now I think that we are in a temporary sideways price action, and on the 4-hour time frame, I actually have a nice 2 wave counts that I'm looking at. Firstly, actually, let me just bring you to this daily chart where I'm tracking a potential triangle. So it's an A, B, C, D, E, and we are now in wave E after bouncing from the lower side of this range. So this range could resume, as I said, maybe towards the end of the summer, and then we see a resumption lower in the second half of this year. But the more importantly is that we are now waiting on this 3-wave rise to unfold. So for now, crude oil could stay here in potential recovery mode. Now, based on this, I have actually 2 wave counts here. Okay, so the first wave count suggests that we completed wave D, and we are now in a wave E rally, which, as I said, should be made by 3 waves. So there is still plenty of room to reach the prices, the upper side of this range. Okay, so after this three-wave rise, we would expect that market will turn to the downside, ideally at 80-60, maybe even, who knows, 83. The upper side of this range could be tested. But then we have another wave count here, which shows, and maybe it can be even more clearer based on the short-term structures, which shows potentially 5 waves down from that April highs. What's the most important here, that this is also the bearish interpretation, even more bearish than the previous one. So in my opinion, both wave counts suggest that the crude oil could experience more weakness after this three-wave rise is completed, which for now should reach higher prices. Okay, so by the way, we have seen move to the downside here over the last 2 months on crude oil. This could maybe be the reason why, who knows, inflation tomorrow, which is expected 3.4%, could come down below 3.4%, maybe 3.3, 3.2, we will see. But then after summer, we could again see this cycle maybe continue to the downside if, who knows, maybe inflation will remain sticky after all during summer here. So I still think that for now we have a pretty good wave structure suggesting that crude oil could see more weakness. And if that would be the case later this year, it means that also the US yields and dollar itself could see more weakness based on inflation expectations. So looking at maybe at the US yields, as you know, I've been repeating bearish US yields short term. That was 2, 3, 4 weeks back. We were expecting more weakness because back then, if you recall, I was looking for 5-wave drop and a sharp rally and expected more weakness. But now when we reached a new low, well, the easy call is gone, okay? Because in Elliott wave terms, each structures will normally be made by 3 waves, A, B, C, or maybe this ABC will become 1, 2, 3, 4, 5. And now when you have this 3-wave movement, I don't want to be too smart and say, okay, we are going bearish because that's a 1, 2, 1, 2 bearish setup, because I definitely realize that this could easily be ABC drop. Okay, so don't go too far with the wave counts and your prediction. Just rather wait, make a step back, wait on market to decide whatever that's the case, and then go with potential bearish or bullish views when certain levels are broken. Okay, but when it comes to maybe slightly bigger picture, I still think that US yields will see more weakness and that we have seen an important top here back at the end of 2023. But I'm just not sure if this wave, completely sure if this wave B has already finished and found the top here, or is there going to be another retest of the 78.6%. What I would be looking for in the near term is the reaction here between these two levels. So as you can see, we are trapped between this bearish level as I marked it and this upper, which could even call potential short-term bullish level. So as long as we are trading here between these two, it's a neutral zone for me. But I would be very, very bearish if we can break 4.27%. If that would be the case here on the 10-year yield, then I think that more weakness immediately could be seen, maybe even through summer. Okay, so of course tomorrow is the US CPI date and also the Fed decision as well. So we will see how market will respond. But definitely it's very important for me to see these breakouts before I may confidently look for next direction. Let's also not forget that this maybe short term, if you're just more like an intraday trader, you look or read this as an impulsive reaction. So maybe even after short-term dip, you could see more upside here and then maybe more weakness. We'll see how everything will unfold. But as I said earlier, based on this, based on the fact that market has reached a new low and immediately reversed higher, we just have to be very careful here. Okay. Now, if we take a look here on the dollar index, unfortunately, this market is just moving sideways and it's trapped for a while now in very big ranges. So again, you have to be very flexible and not rushing with any kind of a prediction if the market is not going anywhere. Okay, so I'm always trying to be open-minded and just be prepared on the different scenarios rather than surprised. And what we are seeing here is still that actually, if I hide this for a moment, you can actually see that market is just sideways, especially maybe if you look back, not just from a year back, maybe even more, you can see that we are just trapped in very this big range. Okay, so it's very important maybe to be flexible here. And what I mean by that is that this correction that is unfolding away from July lows 2023 can be in different forms. Can be a triangle, can be even ABC up to 109, 108, and then you see a triangle in the middle, and then you see a reversal to the downside. But what's the most important in both examples is that the drop from September of 2022 was impulsive, was a very strong one, and now we are making a pause which takes a longer period to unfold, which is totally normal and perfect. So I think that this bearish triangle is totally valid, and I would most likely look for this to be my primary wave count, okay, especially if the US yields, if they would break, as I said earlier, 4.27%, then I think that we would have quite important evidence that US yields are headed lower, and this could mean that dollar will not retest higher resistance levels. But if tomorrow we get hot inflation, or maybe just around expectations, and you will see during summer maybe stocks making a pullback, which may not be surprised because we are at all-time highs. Of course, market could slow down based on seasonal charts as well. Stocks could slow down, so maybe that's also another indication why dollar could either stay sideways or even test higher resistance levels. Okay, so here's also another interpretation, very important one. It could be an ABCDE triangle in wave B, and you will see higher resistance levels, 108, and then a reversal. But again, the bigger picture to me is clear. Okay, we are just now in the period of consolidation, unfortunately, and this dollar at some point, this dollar trend will have to resolve itself, but I think that this still may occur later this year. Okay, maybe when we get a lot of volatility after summer during elections, so we will see how market will unfold till then. But based on the current substructures that we see, I just don't believe that we will immediately see any kind of a real breakouts. Okay, hello Oleg, what about gold? Bilal, I will take a look on gold a little bit later. Okay, so make sure to stick with us. By the way, thank you once again for everyone to joining me here. So please press a like, press a subscribe, visit our website wavetraders.com if you are interested in more of those analyses on a daily basis. Okay, now here's the S&P 500. That's why I said earlier that maybe we will experience some kind of a slowdown. Okay, why? Because, by the way, we are here at new highs. Okay, we can possibly count 5 waves within this wave 5. So maybe we're in a very late stages of this current bull run. It doesn't mean that 5th wave will end here. It means that it's damn late to buy the market at these levels. You want to see some retracements, and ideally we will see this retracement playing out through summer. Okay, so if you're looking for some, let's say that you want to be in your positions for a few months, I would rather wait on some retracement and then look for potential entries at better levels. Okay, because if you look here, by the way, in our past webinars, as you know, we have been tracking this price action very closely, and we've been identifying an ongoing, 3 weeks back, ongoing incomplete 5-wave structure, because we said that this drop is corrective, because when the market recovered above 5,150, we were not been able to count this as a bearish impulse. So it means that was not a top, it was just a correction, because top is confirmed only when you have 5-wave drop. Okay, so after that, when market overlapped these levels, it extended even higher. So we knew that most likely the impulsive structures are back, and that uptrend should stay in play until we can count 5 waves up. So after this very nice pullback, very nice dip towards the 38.2%, we labeled this as a wave 4, and now we are already trading at the wave 5. So of course there can be some more upside towards 5,400, but I don't believe that we will see any kind of aggressive extensions higher. Just keep in mind that market could slow down during summer, maybe already in June. Here you have this seasonality chart. You can see that in June we were consolidating, while in May we were moving to the upside, like we did now in the second part of May. So this looks very interesting, especially when also this matches with the Elliott waves as well. So just be aware that maybe there can be some pause coming, and of course this will impact the US dollar if the stocks will come to the downside, and this means that dollar range will just stay here. Also, now when we look at some of the currencies, it's maybe worth to keep an eye on this correlation. It goes back to April, okay, when actually a lot of currencies like Aussie, Kiwi, Pound, Euro, all of them have bottomed and then turned to the upside. And obviously at the same time, that's when the stocks also turned higher. And you can see that stocks are doing very well. S&P is up more than 5%. And then you have Kiwi up 3.4%, Aussie, cable, Euro not that much. You can see that Euro is much weaker. CAD is very, very weak. We will not mention Japanese yen because we know what's going on there. So I think that this is very important to give us some kind of a guideline where I want to be involved if this risk on will just still continue tomorrow after the US CPI data, if dollar will come down very significantly. What I want to look for? Well, I certainly would be very interested in commodity currencies like Aussie and Kiwi. Also, Pound can be quite interesting. Euro not that much, especially because it's very weak, and we know that last week they cut interest rates. I think that just today from some ECB members they said that even they will lower the rates even further, it still would be a restrictive policy. So looks like that neutral rate zone is much lower, means that they have room to they can even lower rates further, and that's why I don't believe that Euro is at any good interesting potential long opportunities, especially when it comes to structure. It's not really that clear either. So I think that for now, Aussie and Kiwi cable, these are the ones that I will focus on in a risk on environment. But if suddenly we see risk off, if stocks would really show us some very strong reversals, then I would have no issues selling the euro dollar, which is already weak. Now, if we look at Kiwi, okay, so that's why I really like this one, because it's been doing very well, outperforming the others. And by the way, we have a pretty clear 5 waves up. Okay, so we have waves 1, 2, very nice extension in the middle of wave 3, wave 4 pullback that stopped at the area of a former wave 4 and then push higher for a wave 5. And now we are seeing this reversal, which occurred after jobs beat expectations on Friday. And then, but still, unemployment rate was up more than expected. So it's quite interesting reaction still, and that's why maybe after all this will be just a temporary pullbacks that we are observing here. So what I'm looking at is now we are stepping into the period of consolidation. And again, whenever you see period of consolidation, whenever you think that market has potentially is going now sideways, you just should not buy the first dip. Okay, you wait on market to make a free wave pullback, because that's the basic pattern of the Elliott wave principle. You have impulses that moves in the direction of a trend, and then market will slow down in free waves that will unfold as an ABC formation. In such case, the first support would be at 60.80, which again is the area of this fourth wave. It was also the previous swing high, so very strong zone here. Also, it's worth to know that whenever I am expecting a correction of a higher degree retracement, I would love to see, it's not always the case, but ideally you will see the 38.2% as a minimum fib retracement. Okay, we still haven't touched this level, so I would be willing to see these levels before I may even consider that we are potential bottoming. Of course, below that you have even more important and strong levels like the 61.8%, which comes in around psychological level here around 0.60. So this whole zone certainly will be very interesting, I think, for Kiwi to stabilize and potentially make a new turn to the upside. Okay, so Kiwi definitely is on my list here, and I really want to see how everything will react after the US CPI tomorrow. Also, keep in mind that not only Kiwi itself, but Kiwi has made very impressive run over the last few weeks versus Aussie. If we look on Aussie versus Kiwi, you will see a pretty nice and clear directional move in 5 waves on Aussie Kiwi to the downside. This means that Kiwi is doing very well and will most likely continue in this direction. Now, I mentioned also that I would not be looking at the euro dollar, and the reason is very simple. I mean, I realize that this could be some kind of a flat formation, but what are the chances that this is really the case? I mean, probabilities for this wave count to play out as I think, let's say the dollar index will turn to the downside, then of course it has a chance. But when it comes to the wave structure itself, when it comes to confidence and the right look of the Elliott wave principle, this is not the trade for me, okay? Because there are just too many of overlaps here within this rise. You have a very strong drop here, which, by the way, if would be wave C, you would want to see that wave C will find the support at the previous wave A area, which is not happening. So everything to me looks like it want to be turned bearish. So that's why I don't want to buy euro, even if it will recover from here. I'm 100% sure that there will be other currencies that can be doing much better and will have a much better looking wave structure as well. So when it comes to euro, I just would try to avoid it. And by the way, we are still trapped in this very big range. We haven't seen any kind of a real strong breakouts either here. So I just think that you have to maybe step back, make a step back here, and have different ideas on the table as well. I really will focus on this one. It will just keep consolidating through summer. I just think that maybe much better levels when looking at the big pictures would be still around 104. I'm not sure if we will get there. Maybe this will just remain like a bullish triangle, but it certainly looks like a very, very strong support if we suddenly see this dip. I'm not sure if we will see this dip, but if it happens, I would most likely be looking, be a buyer down there. Okay. Also, yes, someone sterling, yes, I will look at the euro pound. Also, I said earlier that pound is doing very well. You can see yourself where pound is currently trading and what the euro is doing. Okay, so definitely it's worth to keep euro dollar on the sideline, especially in this risk on environment that we are still currently positioned. Now, last time when we spoke about cable, we said that very strong resistance is going to be at this trend line. It's still holding here. Okay, so we are now consolidating around these levels and not really breaking out yet. Again, maybe this breakout will occur tomorrow after US CPI. Also, Bank of England, we'll see if there will be even more speculations that they could potentially cut rates. I think that inflation dropped quite nice in April. But still, despite all of this, cable is doing very well at this level. So I'm thinking that maybe there can be very nice reaction to the upside if the US CPI data will soften tomorrow. Now, what I'm looking at here is a potential wave for consolidation. We have some very nice support at 12675, which certainly has to hold here. So if we see another drop here in the near term, let me do this. Okay. If we see another drop here, I want to see just temporary spike and immediate reversal to the upside. And then I want to see some daily nice bullish candlesticks to make sure that we are bottoming, that we are headed higher. Because keep in mind that we see this overlap, okay, here with 12633. Then I think that maybe even this consolidation that we are trapped for last year or so can even be an ongoing ABCDE triangle. You can see this by yourself. And then if you could, let me just label this, it could be easier for you. Like this. and you will see wave E reaching lower supports. Okay, so that's why I'm saying that maybe it's worth to wait a little bit more here, and let's see if that potential support levels that I mentioned on the 4 hour will hold or will get broken. But I certainly think that still later this year cable could do very well, but I just realized that maybe some pause could take place here, especially if we see this overlap. Now, someone asked for euro pound. As you know, we were analyzing euro pound actually at the start of May, I think, when we were looking for this potential completion of this wave B triangle, and so far you can see some very nice reaction to the downside. We even have a breakaway gap here through this triangle support, so it looks like that this wave C is now in full progress. But again, just don't think that this trend will resume forever. There will still be some reversals like it's been happening in the past, okay? But what I'm looking at is that wave C is coming out of a triangle. So most likely we are in a final leg of this higher degree bearish trend or structure that is already in place since 2022. Okay, so there's still room for more weakness, but I still think that sometime this year we could see some supports. Also, look at this cycle model as well. This goes actually back to 2016, and you can clearly see that we are now moving to the lower side of this range, while the time also suggests that we are that we can be coming to an end of this current bear cycle that we are in. Okay, so again, this model also suggests that this year we could potentially reach some very important, interesting support. Of course, there's still, that's a bit of a longer term view, but still in the short term, this can mean that even 200 pips or more, there can still be some weakness coming here through on the euro pound. But this current breakdown on euro pound, just another example, what you should trade if you're looking for risk on mode. Okay, to resume. Again, please don't forget to press a like, leave a comment if you're watching this video recording later, webinar, or make sure to subscribe to our channel and put your notifications on. Okay, so you will be notified whenever we will release new updates here on YouTube. Now let's take a look on dollar yen. Okay, so dollar yen, we have new policy decision by Bank of Japan. I think it's going to be on Friday, if I'm not mistaken. Also, as you know, there are some hawkish expectations. They are going to reduce bond purchasing as well. So this is definitely something that could keep Japanese yen on track to the upside. Also, what I would like to note is that if tomorrow US dollar will get very strong after the US CPI, you will see a strong move to the upside on dollar yen. And then, of course, Bank of Japan or Japan in general could possibly be even more aggressive with talks of intervention. It really depends where dollar yen will be trading by Friday, or how it will react tomorrow. If tomorrow dollar yen would be much lower, let's say 154, then that's completely different compared to if we will be trading around 159, and their rhetoric from Bank of Japan will also changing in that case, I think. Now, from an Elliott wave perspective, what I'm seeing is wave A. Now we are consolidating for a wave B. Now maybe wave B already has finished here, okay, and you are now going to see a retest of resistance around 158. So no matter how I looked at this price action, I think that 158 is a very important resistance. It was also the price area of this intervention that goes back to end of April, and you have the 78.6%. So that's a pretty attractive, interesting levels. There are plenty of stops, I'm sure, above that level as well. So maybe there should be liquidated before market will turn back to the downside. And technically, of course, this is very possible, but for now, even if that would be the case, it's still an incomplete corrective pattern. But whenever, if you want to trade, maybe it's safer to wait on pattern to complete itself, to show us that wave C is done, whenever you will see 5-wave down from the resistance, and then you could potentially look for trade setups in your direction with clearly identified invalidation or stop levels. Now let's take a look also maybe on dollar Mexican peso. As you know, this one has been in a very strong rise. It's been very good carry trade over the last few years. I still think that this story is not done deal just yet. I think that there can be more weakness coming through. What I see here is very nice ABC rise. Maybe some will say, well, that's an important bottom. Okay, maybe it is, but what are the odds that this rise will continue higher in impulsive fashion in 5 waves rather than 3 waves when you have higher degree trend here bearish from 2020? So I think that odds are in favor of the bears, and I certainly would not be chasing markets here with any kind of long setups when you have ABC also going back to the former area of a wave 4. Okay, so that's a pretty nice, interesting resistance, I think. And I would not be surprised if we see either just this bull slowing down or maybe potentially even some new intraday impulsive sell-offs. With our members, we are always, of course, updating the intraday charts as well, especially when the price action unfolds. And I will keep a very close eye on this one. If we suddenly see, let's say, an impulsive intraday sell-off, then this will, on a short-term basis, then this will tell us that maybe short-term top has been found here. Because we know that Elliott waves obviously are fractal. Now, when it comes to dollar Mexican peso, also, maybe it's worth to know that crude oil, when it's now stabilizing, it can have some positive impact on Mexican peso as well. It's not perfect correlations, I know, but keep in mind that even stocks are still, by the way, in an uptrend. I know that it can be in a 5th wave, but it's still in uptrend until it's not. So maybe if these stocks will just resume even higher, extend even higher, Mexican peso could still, in my opinion, see some strength or rally versus the US dollar. Now, let's take a look. Who asked for it? Bilal asked for gold. Okay, so gold, what's going on? As you know, last week, I think it was ahead of jobs data. Gold metal sold off, sorry. After China announced they did not buy any gold in month of May. Okay, so that was seen as a bearish because if China is not buying then what? Anyone will stop buying. So market sold off. But I think if they didn't buy here when gold was actually trading at all-time highs, well, good for them, because they didn't buy but at the highs, and they can certainly then be even more aggressive with buyings when they have this discount price. Okay, so I think that still, when it comes to this interpretation, I just don't think that that's bearish. It would be bearish if they say that they sold gold. So in my opinion, I just think that that's a pretty nice solid retracement here. It could be ongoing wave 4. So if you look here at the Elliott wave model here, this could be the 4th wave pullback that we are now at the lower side of this potential corrective range. Of course, the ideal support is still, I don't have, or I will not show the wave count here on the smaller time frames because something has to be reserved for members. But of course, the ideal support would be around 2250, maybe with spike below these May levels, and then let's see if price can stabilize. It certainly has some room for more weakness here in the short term. But overall, I think that that's still a healthy uptrend as long as the market is holding above 2133. Only break below that level will completely invalidate this view, and in such case, unfortunately, we will have to turn maybe bearish or maybe just sideways on metals. But keep in mind that higher metals go closer we are to potential ceiling, right? So by the way, we have already seen some very nice moves here over the last few months. Silver as well. So whenever we will see some movement into higher degree correction, I just don't think that this should be any kind of a surprise. And if we see 2001-33 broken, then certainly I just think that this is going to to happen, that we'll just stay sideways or even see much lower prices on metals. But for now, I think that this range, these levels are still very, very interesting and attractive. Also, tomorrow, again, if the US CPI comes out strong, what you could see, US yields will firstly move to the upside, and this could make dollar strong. You will see gold maybe pulling down, but then a lot of inflows could be back into gold. Inflation will be sticky, or even higher. Inflation will get hot. Then again, gold could, even after initial spike to the downside, could stabilize and turn higher. So from that point of view, I still think that gold is also quite interesting. Now let's take a look also on nvidia. Nvidia, as you know, it was a stock split. Everyone thought how this will impact the price. Obviously, the sentiment structure remains quite similar. It should not change. The only things that change is that a lot of more traders could maybe afford to buy one stock of Nvidia because it's cheaper. But when it comes to wave structure here, it's obviously we're on the same track like last time. We are seeing prices in a fifth wave. So still, we are bullish here, but we could maybe this summer, we could run into late stages of this bull run. So just keep in mind that even after earnings here back in February, we have seen slight move to the upside, but then pulled back towards this earning release date. And who knows, maybe at some point we will also see something similar now as well. Okay, so if you're looking for Nvidia, maybe just be very, very careful, consider your risk, because maybe this, whenever you see a push to a new high here, could be the final leg here within the higher degree sequence. And also, as I showed you also on the S&P 500 earlier, we could be there as well in a fifth wave. Also, I have another listed stocks here. Let me check. I have AMD. This one is quite interesting. I think I thought I was talking about this one a few weeks back. I said that this drop is not really clear. It can be impulsive. It can be a sharp WXY. Okay, because the higher degree, same degree of wave 2 was complex, so it can be easily a very sharp wave 4. But what's the most important is that rise from here towards here looks impulsive. Okay, if you look closely here, you will be able to count 5 waves up. So even if this whole rally away from that low, May lows, is going to be just temporary and corrective, I think that there is some room for more upside after this pullback that we are tracking. So I think that 155 is some very interesting support. This one should be moved lower here. Okay, so as long as we are above that level, I think that this current recovery can possibly extend even higher. And then we will see and try to figure out if this is wave 3 or wave C. Don't try to force the wave counts or predict too far into the future. Go step by step. Now let's take a look on Amazon. I think this one is looking quite interesting. So Amazon is here, is looking quite well with this wave structure. Okay, you have wave 1, wave 2, nice strong push to wave 3, and notice what is happening here at all-time highs. We are consolidating, and usually when these important levels are touched and you see market just slowing down rather than making a very sharp significant reversal, usually that's a very good positive sign. Okay, because at important levels, the important levels, big levels, maybe will not be broken just immediately. Okay, there will be patterns that will form around these levels to try to confuse the traders or liquidate both sides of positions before market may finally break out. And this is what I'm looking at here in a wave 4. So it could be an ABCDE pattern here. Wave 3 possibly, hopefully, will show up back towards 180 or so, and then we see finally a break to the to new highs out of this consolidation. So regarding the wave structure, I really think this looks very nice so far. Also, looking at Tesla, I think we also covered Tesla here sometime back. So Tesla, as you know, we discovered bottom here with the wedge formation, could be even an ending diagonal of a 3-wave drop from July highs 2023, and now we are bottoming. What I really like here, that an ending diagonal, not only that caused very strong sharp reaction to the upside, this reaction even came from the 78.6%, and after which touch these levels that goes back to earnings report from a more than a year back, and also this wave B swing low. So we stabilized at these levels. We have seen a pretty nice reaction higher. So I'm thinking about more upside after this pullback. So maybe this gap here or 160, this could be the first interesting support. But I certainly think that a higher degree consolidation here will just not be broken anytime soon. These are just more like a short-term swings that could potentially play out to the long side as long we are holding this 140. Also, let's take a look maybe on PayPal, because I know that I covered it a few times this year. Specifically, as you know, we have been focusing on this wedge pattern. It was possibly even an ending diagonal in a wave 5. Now these are very powerful patterns. It tells us that bear markets are losing strength. It tells you that momentum could potentially even explode, but in the opposite side. So I think that this is valid. Still formation is valid, that we'll see much more upside, but unfortunately then this first leg is going to be make a reversal as a leading diagonal. So I'm looking for this unfilled gap maybe around 73. This goes back to August 2023, so maybe fill this and then we see a pullback and then a very strong push to the upside. So there's still plenty of patience needed for this one to play out, but I certainly think that we have a quite nice structure that could potentially make PayPal much stronger later this year. Okay, now what we have left, we will take a look now on the cryptocurrencies real quick. So firstly, I will actually look here. Okay, so we will take a look on the crypto total market cap. Okay, so as you know, cryptocurrencies have been doing quite well even after this dollar has seen some reversal. Cryptocurrencies are doing quite well. Sometimes even cryptocurrencies are holding gains. Even I know that in the past months were like that. Even when US inflation caused dollar to rally, cryptocurrencies were stable, doing quite well. So in my opinion, I still think that cryptocurrencies will see more upside, but I'm not really sure if this will happen straight from here or we will see maybe consolidation for summer. I think that right now, this week could be very, very important and key. Currently, we are seeing some very nice, very strong sell-off on cryptocurrencies, which is coming into very important levels. And now the question is if we'll get some short-term overlaps, specifically in Bitcoin, that will make higher degree correction more complex, or will these levels hold and we will see immediately reaction higher towards the end of this week. So what I'm looking at here is definitely on crypto total market cap. We are bullish and we will be expecting more upside. But as I said, this wave 4 can be a bit tricky. Maybe it has ended. Maybe it will unfold as a triangle here, especially if the trend line resistance will be broken. So here is our first interpretation. You can see that we have potentially wave 1, wave 2, and you have a wave 3. And notice that this move to the upside here was in 3 waves. So that's why we came out with an idea that maybe what if this is a wave 4 flat formation. But in such case, what you want to see is a sharp immediate reaction to the upside and overlap with this level. This should happen on, let's say, maybe in 2 days or so. If that would be the case, then I think that we would have very strong conviction that market is headed to the upside. Okay, but if this overlap occurs, then we can either stay for a triangle here, or possibly we even completed the first 5-wave rise. And why I'm highlighting this one is because the triangle, which could definitely is possible then if we stay sideways, is bullish. But if you can count 5 waves up from that lows, well, that's even more bullish than triangle itself. Okay, because triangles can sometimes be very tricky. So can be in wave B, can be in wave 4. So because we can count 5 waves up here as well as an alternate count, I just think that cryptocurrencies in general could do very well, but after a 3-wave setback. So I'm thinking about more upside on cryptocurrencies, but as I said, in the near term, we have to see what will be the reaction at the current near-term levels. Okay, we are testing some serious support levels ahead of very important Wednesday. Also, if you look here on Bitcoin, you can see here, okay, we moved very nicely to the upside. We haven't really seen a breakout here. We are just falling back into the range. And if I label this for you, and if we see this wave 4 making an overlap with 650, then of course this bullish interpretation will be invalidated. In such case, I'm afraid that we will just stay in the range for a longer period for a potential triangle. So that's why I'm saying that in the near term, this will be some very important decisions. And unfortunately, we'll see these overlaps, and if we see more near-term weakness, then consolidations may take longer term to unfold. But what's good is that I still think that there will be more upside after this pause, but maybe this will occur, who knows, maybe after summer, especially if stock will also see a pullback, as I showed you the S&P 500 earlier, then of course this could also impact the cryptocurrencies itself. Also, here is Ethereum. Here we also have 2 wave counts as well. So again, we are at the first potential supports here. I'm not sure why this is not updated. Okay, so here we are at the first potential support. If we consider that maybe wave 4 could be a flat formation here, okay? And you're definitely in flat formations. What you want to see is that price will stabilize at the area of a former wave A, which is right now right here. And also this comes in at the 38.2%. Okay, so that's the level from where you want to see a bounce. Okay, so again, if we see a very strong bounce to the upside, let's say you get a daily close above the previous swing high, and that was just a temporary, just intraday reaction lower, then this would be seen, in my eyes, as a confirmed reversal, and that support holds, and it means that bulls are still alive. If today we will just stick to these levels or even take another dip tomorrow, then I think that the deeper correction will take place. And in such case, I would wait on a higher degree ABC pullback, and I would look for supports at 3,200 to 3,300. So it really depends what kind of a trader you are. Are you waiting on an intraday setups? Then you should wait on a bounce first. Are you building maybe a trade around this Ethereum for a longer period? Then of course, if you see lower prices, you will just accumulate more. That's just a simple approach. But I definitely think that as long as we are above this level going back from start of May, I just think that Ethereum could see more upside. Okay, traders, that was a pretty long webinar today. So I hope that everyone enjoyed this presentation. Once again, if you just joined us late, make sure to watch the recording from the start. Make sure to subscribe to our channel, to click notification button, make it on so that you will be notified whenever we will release more of the videos in the future. Also, if you're not our member yet, make sure to register at wavetraders.com. You actually will also have ability to look inside of the members area, like a demo version. Okay, traders, enjoy your day and be careful tomorrow. Bye.